Thank you very much, Steve, for taking time out to speak with me here at Securities Finance Times. Going straight in, the first question, why is the Canadian Collateral Management Service so important?
I think it's coming at a good time. It's a time where collateral velocity and the ability to mobilize collateral efficiently and in a way that can truly democratize the movement of collateral and repo in the Canadian market is so required. The bankers' acceptances are going to be ceasing from June this year, and that really leaves an opportunity for the rest of the market to get involved. That's the buy side in a lot of these collateral type transactions. That's just one example. Of course, there's capital pressures. There's the need to optimize collateral, particularly on the sell side, and all of these factors kind of combine into a point where you need something in the middle that's efficiently mobilizing things across the market. So not just for one firm, but across sell side, buy side, and market infrastructure. So really creating efficient rails for the velocity and mobility of collateral.
Would you not say the Canadian market's a little too small for a triparty service?
So the Canadian market's the biggest little market in the world, and there's many exposure types that are pretty large in size, securities lending, repo, and others, which have got a substantial amount of counterparties and flow. And what we're really excited about is the ability to be able to connect this market into other markets in the future. Of course, it's adjacent, to the US and with a great deal of connectivity into Europe and the UK. And we really see having efficient rails as a great enabler to improving collateral mobility, not only domestically, which is where we're starting, but also eventually cross-border.
Okay, excellent. And what type of diversity of participants is on there for the customers?
Truly exciting amount of counterparts, and typically triparty can almost look very sell-side heavy, somewhat. We have got a lot of the sell-side players already on board onto the service, but what's really exciting is we're onboarding the second-tier banks, as well as market infrastructure, CDCC, which has launched the Secure General Collateral Note. That will be a very exciting counterpart to onboard as a financial market infrastructure, and then extending it into the buy side. So big life cos, pension funds, then the mid-tiers. The one that really excites me, in addition to all of those, of course, they're all equally important, but is the ability to offer like corporate cash, an alternative to unsecured deposits today. They'd be able to book a triparty repo for the first time, an easy way to do that, which will benefit the counterpart banks that are delivering the collateral, as well as create a bit of a liquidity hub, which the CCMS will represent in the future.
How do you see this as an improvement on existing triparty services?
Certainly, in terms of the way we've designed it, I think starting a triparty platform in 2023, 2024 gives us an advantage of going, well, we know what works, and what could we do if we had the chance to implement it that would take it to another level? And that's exactly what we've done with CCMS. The ability to settle and mobilize collateral directly out of trade or settlement accounts is a game changer. We still allow for traditional long boxes, but there's the option to not have to have operations teams manually move securities into triparty shells anymore. So what this is doing, it's blending these two worlds into an interoperable mix, thereby helping even a CCMS service like we're doing really facilitates settlement and actually helps get securities back in time. The other thing is we're introducing a whole new set of tools in the toolbox. The ability to do repo simulations, the first AI-based eligibility tool in OSCAR, which is a great initiative from our partners Clearstream, of course, who we are partnering with on the CCMS. And these all combine into a really unique service offering. And on top of all of that, just the cherry on the top is just the speed at which the service operates. It is very, very efficient. The ability to mobilize, collateralize, substitute hundreds of lines of collateral in seconds across the industry really is a game changer.
How does this service promote interoperability?
I think the first one is for actual settlement, because we're not bifurcating the settlement world and the old concept of long boxes. We're actually blending those two together. So where a service like this can facilitate through its ability to do unlimited substitutions, it interoperates with the real life settlement world. So that is a huge deal. Second piece is interoperability with existing market infrastructure. CDCC is a really good example. And then as well with a multitude of fintech providers and effectively collateral trading venues. By us doing some of this work with some of these vendors, it provides a easier on-ramp for customers to access the services and to be able to transact. So we're looking at interoperability pretty much in every way that we can, and particularly on the technology front, enabling ease of use is front of mind for us.
Thanks very much for taking time out to speak with us here at Securities Finance Times. It was superb, some interesting points there, and look forward to catching up with you again in the future.